and welcome, ladies and gentlemen, to yet another edition of Anviti Virtual Connect. We are in conversation with a series of our leaders in context of the times that we're navigating today. So today we have with us Anand Kaul, and he heads our M&A segment of the business and specialty. I have a few questions for you, Anand, that are all in line with what we're seeing as the changing environment of the world as we see it today, both in context of business and as we're operating and navigating through these pandemic times. Welcome to the conversation. Lovely to have you here.
Thank you so much, Shreya.
Thank you, Anand. Anand, I'll jump right in and I'll ask you about when you look at the entire M&A environment, both globally and in India, how do you think the virus and the pandemic has impacted this? And what do you see are some of the changes that are happening currently?
Sure. So the pandemic has impacted M&A activity in a big way. If you compare the numbers from last financial year, the deal flow has fallen almost by 50% globally and about 35 to 40% in India. I think only those transactions which were pre-negotiated before the COVID effect came into existence are getting completed. All transactions which were at the last leg and required some final inputs from the regulator are getting completed. But the new deal flow is not there. We are still waiting for the market to pick up, but that is becoming a challenge. In fact, the PE and the VC community are now redirecting their energies on maintaining the health of the portfolio company rather than pursuing long-term goals through acquisition and deployment of fresh capital. There are certain industries which have been affected more than the others, like travel and tourism, leisure, oil and natural gas. And we are hoping that things would improve soon. But for the time being, in these sectors, we feel that more rescue deals and restructuring and distress sales are the ones which would likely happen.
Right. So that brings me then to looking at how the pandemic has impacted the manner of timelines. You spoke about how it's impacted some industries more than others. You spoke about the landscape and how that's shifted. So what does this mean to transaction timelines, and how does this impact how they take place? Tell us a little bit about that.
Sure. So cross-border M&A requires a certain amount of optimism and confidence, which obviously has taken a beating. So we are not seeing a lot of activities happening in that sector, but we are hopeful that this would improve. In fact, industry experts are saying third quarter is likely to be much better. However, so far, what we are seeing is that closing is taking a lot longer than the regular timeline. Valuations are taking longer to complete. Due diligences are taking longer. Regulatory approvals are not coming in time. So all those effects have been there on transaction, which has elongated the entire closing process.
Right. That obviously then makes it a lot more challenging because of these delays and the way you're talking about how the impact is sort of going to spill over as well. So that brings me to the underwriter perspective, and how has that changed? So how have underwriters now started looking at the M&A transactions, and how is that sort of impacting the space?
The underwriters are now pushing for a COVID exclusion, which basically says that any claim due to COVID would not be covered by the policy. However, as risk advisors working on behalf of the client, we are giving a strong pushback. We have the opinion that language specific to certain warranties should only be included and not a general exclusion to COVID. So, for example, if the underwriter puts a condition saying that loss arising due to COVID is an exclusion, then potentially all losses can be attributed to COVID. We would insist on language which would probably say a breach of a material contract because of COVID should be an exclusion. So we are giving a pushback, but obviously we are seeing a lot of reluctance on the side of the underwriter as well. Also, some underwriters are changing the definition of loss, as I previously mentioned. So that is bringing down the efficacy of the policy. However, there are other underwriters who are willing to be more flexible on this aspect. So that is one major impact we've seen. Second, any reps and warranties related to COVID in the share purchase agreement are a exclusion from the point of view of the underwriter. So any risk which the seller might be carrying because of the COVID situation is not being picked up by the underwriter. So these are the two major COVID impacts we are seeing in the market right now.
Right. And now this brings me to actually looking at a slightly wider angle or a wider perspective point of view. So do you see or expect any changes in the market environment in the next 12 to 15 months because of all of these that have happened in the last 6 months or so?
So the deal flow is picking up now, and we are hoping that it would only continue to grow. But there are still a lot of challenges in the market, which I think would only be put to rest once the vaccine is in place, which could be anything 68 months from now, as most organizations are saying. But a lot of companies which have been able to adapt themselves with the new realities and have been able to adapt new forms of technology may turn out to be the winners during this downtime. A lot of companies which are cash flow rich and have strong balance sheets are trying to make a best of this opportunity where they are acquiring other companies. So in a sense, somebody's loss is somebody's gain in this market scenario.
Right. Which then brings me to the question of wondering what it is that organizations that are looking at starting the process of an M&A, what is the due diligence that they need to do in these times, one? And two, what is the role of a broking partner? Because, that's imperative for clients and for consumers to understand in context of when you start planning, when you need to bring in your risk consultant or your risk manager into the conversation. So if you can sort of address both of these segments of the question.
Absolutely. To answer the first part, I think the clients have to understand that insurance is not a perfect substitute for indemnity given by the seller. And there would be certain exclusions in the policy which the client might not find to their value. So they have to understand what the policy is covering, how it is covering, and what is the risk they're willing to carry on their books and what is the risk they can transfer to the underwriter. As I said, not everything would be covered under the policy given the market situation right now. And as I was saying earlier, exclusions to COVID are being pushed by underwriters in all policies. So the client has to understand what the policy covers as the foremost thing before they go into the process of evaluating the policy or in the process of buying it. In terms of broker, I would feel they have to work with somebody who understands the market, who's done policies and seen claims in the past. The global average is 1 claim per 5 policies produced. And in this market scenario, that average is going to only move up. So they need to work with underwriters and brokers who've seen claim examples, who have claim experiences, and can guide them properly in this market situation.
Right. Thank you so much, Anand, for firstly talking to us a little bit about the entire scenario globally and in context of India as to how the M&A space is looking like and what the transactions and timelines are. Can you tell me a little bit about, I know I did ask you about the 12 to 15 months, but the silver lining in the future. What do you see is going to be pro for the entire market space, and what do you see are some of those factors that are going to impact positively because of the changes that have come in?
I feel companies which would be able to attract higher valuation. Companies which were weak and surviving on outside capital would be wiped out, and newer companies which believe in innovation and which are better in terms of their processes and technologies would be able to thrive. So in a sense, this would be the new birth of the industry where technology would be the driving force.
Right, it is in true form an equalizer. Thank you so much, Anand, for sharing your thoughts with us and for talking to us about this. It is a seriously important space when you're looking at the way the markets are changing and the way the entire dynamic is shifting. So thank you for sharing your insights with us, and thank you for joining us today on Virtual Connect.
Thank you so much for having me. Thank you so much.
It was a pleasure. Thank you, Anand. Thank you.